Did the Federal Reserve Chair just declare victory over inflation?
Yes. And I think it's the right thing to do. I mean, you're seeing, the actual data really punch lower, Jonathan. I mean, CPI, both headline and core, ex-housing, are printing below 2% now year over year. And we all know housing has been a problem in the data. Housing is a lagging indicator. Home prices now in more and more metropolitan areas are falling. In certain parts of Florida, some of the higher end parts, home prices are down, Jonathan, 25%. From a crazy peak, but you're definitely seeing that the housing part come down, and that's going to keep inflation, closer to 2%. And the Fed has clearly, I haven't seen them pivot. A lot of people criticize the Fed of being too stalwart and sticking to their guns and being too slow to pivot. Man, they've pivoted a lot this cycle, right? From 0 to 5.5 when inflation was high, and they just did a major pivot from focusing on inflation to rightly focusing on weakness in the labor market.
There was a phrase we used to hear a lot of pre-pandemic. The Federal Reserve used to talk about extending the cycle, attempting to extend the cycle. I hear the same kind of thing all over again, Mike. As a market participant, do you operate with the underlying assumption that they can achieve that? They can extend the cycle?
They have the ammunition to do it, right? The question is do they have the guts to do it, right? What they should do is cut rates, start now, and I think they get that finally, right? And Powell is certainly on board to that. I mean, if they could snap their fingers right now, Jonathan, and not worry about financial conditions taking off in their face, they would probably put the funds rate at 3.5 today. I think that's probably the right level today, given the growth and inflation outlook. But that's not how they operate, right? They're going to move really slowly, methodically. I'm kind of discounting the probability of 50 basis point cuts at this point. I think they're going to move 25s until the markets force them or the data force them to move more aggressively. But the funds rate is arguably 200 basis points too high right now, but they're going to be really slow, and there's a chance that they have to play catch up at some point. That's normally how it works. But they have a lot of room to engineer the soft landing, right? So I think there's a really good chance they pull it off. And the economy, the private sector, is not over levered, right? They're not over their skis like they have been in most long expansions. It's been kind of a short, post-COVID expansion here. And the companies and consumers and the financial sector and the housing sector are not levered, right? And that's really the most important point when we look at the economy from the bottom up, right? There's a real good possibility that we don't have a hard landing here.